bid is 42.44 for 200 shares. And basically when I'm trading, I will see that. So if you see that the chart here is constantly been going up. Now, if I was trading this right now, I would see that the MACD has gone at a extreme level here. It's starting to curl, and I had this big volume spike. I would be looking to short right here. So what I'd be looking to do is I'd be putting orders in. I'd be clicking orders here, click, 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 click. And if the stock rises up into my order, I know that the stock is getting tired. So I have a good chance that it's going to come down. So even though if it comes up and takes my orders, as soon as I get taken, I'm going to put bids in here to buy it right back at a cheaper price. And I'm going to constantly work that back and forth when I'm at a top like this. And you can see if I hover over here, you can see that the low and the high of that bar is 35 to 61 for a 1 minute bar. So that means that this stock is fluctuating from this price right here down to this price right here over 1 minute. So if I can short somewhere in this area and I can buy somewhere in this area, it doesn't even have to move outside of this bar for me to continually make money. And so on a stock like Microsoft, with the buying power that I have, I'll do this with like 10 or 20 shares in order. And so at 20 shares, if I get hit at 20 shares at 60 and I try to buy it right back at 45, then I'm going to make $3. So if the stock, when the stock is moving fast, especially at the end of the day, I could get hit, bing, 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 and immediately get hit, bing, 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 and again, and again, and again, and again. And at the end of the day, the beginning of the day, when the market's fast, and if I'm on the right side of the trade, my closed P&L will just go up like 3, 6, 9, 8, 12, 15, 25, 37, and it just goes. And then at the end of an hour, I could be up $400 or $500. And that's what I'm basically doing all day long. But the way that I'm picking the direction is I'm looking at the overall chart, I'm looking at the MACD, I'm looking at volume spikes, and then I'm going to also go and change my time frame, and I'm going to look at a daily. So on Microsoft on a daily, you can see that Microsoft is starting to make a breakout here. And so it had this move up, it's consolidated for the last month right in this range, and you can see she's just starting to go over. So on Monday, Microsoft comes and opens up right around the top and she starts to make new highs. I'm buying, 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 buying. And and this is what I'm doing. I'll be watching this guy, and if I'm buying, I want to be real tight to the last trade because the stock is moving up. So I need to be tight with my orders to get hit. And then as it moves up, I'm going to put orders in to sell. But if it's really moving, I'm not going to put them in for 10 or 15 cents. I'll probably try and stretch for maybe 30 or 40 cents because it's moving fast. And if you get out for 10 or 15 cents, you're kind of like giving away money. but that's what I'm doing basically.
So all day, right?
All day.
All
yeah,
day.
I don't mess around. Like, so if I go and I look at something like let's see, I could do like trade manager analysis. So this is real P&L now. So if I go and I do like, what did I do from March to April? So if I generate that, let's see. Working. Is it working, or am I not actually online?
So it's like while the others are
there it is.
running.
Yeah. So like if I look at this, so it'll show you that this is what I did for the month. It'll show you how many trades I did. So I'm not joking. I do it all day long. 20,000 trades I did last month.
Wow.
I averaged 64% winners. And so I basically win 2 times for every time I lose over 20,000 trades, and you can't help but to make money. That's what I do. And I make pretty much the same kind of money long and short. It just happened to be I made more money long this time, but there's a lot of times I make more money short too. That's it.
That's it all day. How many hours do you do that, Nick?
It depends on the day. Some days, you can just tell like it's really slow, like especially on a day. Thursday happened to actually be a fairly busy day. because of all of the news and stuff that was happening. But a lot of times when it's a day before a holiday like that, it gets really dead at the end of the market, and you're kind of just, I mean, I'll literally be sitting here like falling asleep, like, okay, I'm done. We're gonna go play golf, or I'm gonna, I do gardening. I'm like, I'm gonna go do my plants or something. That's what I'll do. So, but
so do
that's
you
it.
have any favorite time, Nick, like during the day, like this day, especially 9:30 till 10:30, any favorite specific time that you like to do this kind of transactions?
Yeah,
Trade?
I actually, a lot of guys, they tell you they love to trade the very beginning of the day. And I actually find that the days I get in the most trouble is when I try to get involved in the morning right away. Because, there's lots of common strategies. You have like the gap and go, and you have like, fade the gap, or whatever you're trying to play. And so you need to actually let those play out for maybe 10 or 15 minutes to see what's going to happen. So I find that the day I'm more consistent is the day where I actually don't trade for the first 10 minutes or so. And I try to see what is happening, what's the market doing. And a lot of times I'll be better at it for what I'm doing.
Okay. And then after 10-15 minutes, you get a feel for the market, and then you start decide, okay, I'm going to go Microsoft, or let's say whatever stock you see a momentum, right?
Microsoft, Apple, Neo, Boeing. Boeing I've been playing a lot because it's been moving. And Boeing generally maintains a good spread. So the bid and ask on Boeing will be something like 7 or 8 cents. And very often it won't even trade at either of those prices. And I'll get done in between there over and over and over again. So it doesn't matter to me.
Do you trade any penny stocks?
No, because what I'm doing, you really need volume. Like if I try to do what I'm doing on a stock that's only got 1 or 2 million shares of volume in a day, it's a lot harder because you're kind of like sleeping there. And then you really have to pick the direction right, because there's not a lot of fluctuation. But there's a lot of times that's why I really want to do some videos. There's times where I've played a stock like Apple, which will have a 25-cent fluctuation on each bar, and it'll go down 4 points throughout the day, and I'll play it long the whole day and make money. Because I'm playing the fluctuation on the bars. And so even though the general price of the stock is going down, if I'm waiting to buy at the very bottom of the bars and I get out for 5 or 10 cent winners right away, I can constantly make money, even though the general price of the stock is going down.
Right.
And so it's harder. It's a lot harder, and it's like fighting. It's like a grind. It's like a serious grind to try and make money like that. And it's like, if I had just gone the other way, it would have been so much easier. I could have made 3 times the money, but it's still possible. I've done it many times where I've made money on the opposite direction of the stock, but it definitely is way harder.
Got it. Yeah. Yeah. Yeah, you have you have a point. If you do not want to do what do you call it, the day trading, and then and not looking at the volume, also in the momentum, it's just not worth doing it. So do you do, let's say 9:15 or 9:45, 10 o'clock you get in, and do you do 3-4 hours, or also say 5 hours, or you just do a couple hours? These 20,000 trades you made last month.
Yeah, so it depends. It's
what's your average time that you spend in trading?
I usually will be sitting at my desk almost the whole day.
Okay.
But a lot of times it kind of depends. Like if I'm like in something and I have a lot of shares of it, then I'm not going to get up and walk away or anything. I'm going to be on it, constantly watching it. And if it's something that, I'm in something and I got 100 shares of it, and it's like Neo, and the stock is only moving 20 and 30 cents back and forth, I mean, okay, I'm going to put orders in above the market to get out, and if it happens, it happens, and I'm going to go make a sandwich and take a break, and that's what I'll do. But yeah, definitely I would say the heavy trading is happening definitely up until like 11:30,
Yep.
and then definitely it picks up more at like 2 o'clock. After 2 o'clock, it'll pick up more.
Yep, you're right. I mean, those who's new, typically that's what happens around 9:30 till 10:30, 11. All the hedge fund, and they're done with their shopping for the day. They go for lunch, lunch, and are going outside, and then around 3 o'clock, 2:30, 3 o'clock, they're ready to power hour. You call it from 3 till 4 o'clock. You'll see a lot of momentum that time. They'll decide if they are going to flush out or they're going to be ready for the next day. All right. So yeah. Yep. Thanks for sharing, Nick. Um, I
No
see.
problem.
I see that Yakub and others. You guys have any questions?
Sorry, I'm new to the group. How's everybody doing today?
Good. How are you, Al?
How are
Which
you?
which
Good. How are you doing?
part of the world are you in, Al?
Yeah, it's cool. I mean, I get bored training by myself. It's just good to meet like-minded people that are interested in the same thing. So,
Uh-huh.
yeah. What's your guys' backgrounds in trading? How long have you guys been trading for?
Okay. I am trading many years since 2000.
Oh, very nice.
2000 I've been trading on and off, but I was not full time doing trading. Full time since 2018 I've been doing.
Nice.
I retired myself from the corporate world, and once I retired, then I just got bored, doing just all the charity work.
Yeah.
I had to figure it out that when you do a charity, that wherever you are looking at that, and we founded at the food bank, Urban Food Alliance, and many times my friend used to give me money. They say, "Hey, I want to participate here. Just take the money." I said, "I don't need your money. I don't need your money. I'll
Yeah.
do it." But then after a while, I felt guilty that they want to be part of it. But then others told me, "Why don't you just set up a non-profit organization?"
Yeah.
And then we get a tax deductible and all this, and then do this. I said, okay, I'll do it. So we just started whole process and became 501c and so on. But then after a while, you do, when you're really officially in, then
Yeah.
it becomes it heated. So, oh no, now every week we have to do it. We have families come in, ask for food, and not all the time friends are going to give me money. And I
Yeah.
had to figure out a sustainable way. So that's when I thought, okay, besides doing that, I need to do something else.
Yeah.
And my family was saying, get away, leave me alone. So I started like, okay, let me do some trading. And then I have a bunch of friends that trader.
Yeah.
And sometimes, when you start doing trading, that in year 2000, I used to doing trading, but I was not that active. I was a passive trader. I was an investor also. I have long-term investment with multiple organization, multiple VC and hedge fund. I have my money with them. So,
Nice.
I constantly talk to them and to see, their way of thinking. Then I thought, let me see if I can beat this guy, whatever
Yeah.
money they're generating for me, see if I can do better than that. And
Nice.
slowly, I was able to figure it out, some stuff that I can do better than some of them. And
Nice.
that's how did you do it? I said, this is what I did. This is what I did, right? And then I started doing some smaller gathering like this in different places, and then people started coming. Oh, and some of my friends, they also said, oh, when they are some traders, everybody have their own unique strategy, but sometimes I feel like they're doing too much analysis paralysis,
Nice.
too much. Oh, and sometimes I'm spontaneous. If I believe in something, I know this company, I'm going to get in and get out, or sometimes depending on my goal, that some stuff I keep it for a while. So then I started sharing with the people. This is what I did. This is how I make money. So I remember at some point I made 20. I took 20,000. From 20,000, I made up to 400,000.
Nice.
How did you? I did strictly options.
Yeah.
I made last year. You guys already know that 2018, 2019, how Tesla was doing. I had a lot of Tesla and Amazon, and luckily they all worked like crazy. That in Amazon last year, at some point, you guys might see that Amazon went 3,400 in a two weeks.
Yeah.
So that kind of helped me with it, worked in my favor. to going through, I said, this is what I did. And hopefully, that kind of got some people, oh, I want to do option. I want to do that. I say, you're going to lose a lot if you don't know what it is.
Right.
But that's when we started saying, okay, we're going to build an organization where people has no background, you will start learning. And then today with UrbanHood, you can see all the classes happen. Then on my deal is with them, if you make money, donate to my charity. No, that's what the UrbanHood organization started. That creating a forum where we help people to make money, and then condition that if you don't make money, you don't have to donate. But if you make money, donate to the charity. So
Nice.
that's my background. And then I got a lot of other traders like myself, that say, hey, I do this, I love your cause, I want to be part of it.
Yeah.
So slowly now we have over 5,000 members in the organization.
So what are you guys watching this week? Where are you guys? Where's everybody from? Are you guys from Canada?
I am from New Jersey.
Oh, New Jersey.
I'm Princeton, New Jersey area.
Okay.
Yeah.
All right. Perfect. Yeah.
And Canada, I am Canadian too.
Oh, you are Canadian. Okay.
Yeah. I'm American. I'm dual citizen, American and Canadian.
Yeah.
Canadian. And I used to be in Toronto many years ago.
Yeah.
Yeah.
And Nick,
How about you?
I was in Quebec at one point, and I came to DC. I'm residing in DC right now. So.
DC.
Yeah.
Oh, you are not.
Yeah.
We have a lot of friends in DC.
Yeah.
Nick and others that sometimes on Sunday join. We have a lot of people from that area, Maryland, Virginia, DC.
Yeah.
And I used to live in DC. Which part of DC you are in?
More in like Northern Virginia area, like Arlington. They're
Oh,
around
Arlington,
Clarington,
Arlington.
Boston, just got right there on DC area. So,
Are
Nick,
you? I'm up by Havre de Grace in Maryland.
nice.
You,
Yeah.
You do trading full time, or do you have a regular job too?
I manage a hedge fund actually. It's called CDC Capital underneath Goldman Sachs.
Wow.
Yeah, I'm a portfolio manager for about 750 mil. But yeah,
I'm done talking.
Yeah,
It's cool. I mean, I just like come in, just like to kick it and hang out. I don't really do this too often.
Oh, that's cool. Well, you could be the best person we could learn from.
Yeah, come on.
I dibble and dabble a little bit. That's all, But where's what you said, Haverty, Maryland?
Havre de Grace, up by Aberdeen Proving Grounds.
How far is that from Annapolis?
About an hour.
Oh, about an hour. Okay, yeah.
Yeah, it's Susquehanna River, right?
Dude, yeah, we got to get up, man. It's that's pretty cool, man. You're really close to me, actually.
Yeah, I got a boat. I go crabbing. I go fishing.
I got a boat too, man. Yeah.
Oh, look at that.
Man.
I got a 23-foot pro line walk around.
Nice, man. Yeah. Dude, that's awesome, man. I always like meeting traders, man. I can't really do this at work too often, So
that's cool.
What are you guys watching this week? What's on your trade list this week?
What's on the trade list? Jeez.
Okay,
I said before, I'm looking for Home Depot to start falling. I feel like she's had a monster run, and we'll see. I don't know. I think that as people start to get out from the vaccine locked away at home, that a lot of the money is going to come out of stuff like fixing stuff in your home, and it's going to go into travel. So I don't know. Maybe I'm early, but I feel like Home Depot is going to have a disappointing quarter coming up as people stop fixing their house. That's my theory.
And Mohammed and Sonia, you guys been trading too. How long have you guys been coming here to this group? I'm sorry, they're probably not. They don't have their mics on. I just want to get to know everybody. But I like Home Depot actually. It's pretty cool. It's I'm actually short Home Depot and Caterpillar as we speak. Actually, you guys do a lot of.
I'm in the same boat.
Yeah. You guys do a lot of momentum trading, I assume, right?
Well, I do. I'm very much momentum scalping type of trading.
And Mushi, is it?
Yes, Mushi, just like Sushi.
How do you trade? Like, do you trade like?
I'm momentum. Mostly what I do that swinging. I don't do day trade like what Nick does.
Yeah.
I look for the daily. There is a certain daily momentum that I look for, that especially the volume, like last on every week I see overnight what is there is any new catalyst happen, and that catalyst something really went down
All
like
right.
big time, 20% down, or we know that it's going to go up, gapped up,
Mhm.
right? So I look for those kind of opportunity where if it's a gapped up, I most of the time I have a position and then if I have, I'm going to sell out, and then I'm going to buy back again the one the other side. So on the red days I buy, on the green days I sell. So my say I'm going to the green days, pretty much I'm not buying, I'm
Yeah.
selling. And on the red days, that is for me just blessing. It's a time to start buying, and then, so
That's
yeah,
awesome.
yeah, this is what I usually do. And then with the people on when I am advising or giving ideas, then this is what I do. I just the momentum. That's on that one side. And the other thing for long term portfolio, then I look for the value and on the growth side, on the both side. Usually I look for discounted rate.
Mhm.
Any of those stock is really discounted, and then on the on upgrade side, see if an analyst made any upgrade or downgrade. And if typically I look for any downgrade one, if I see the downgrade got happen, and then let's say these are good business, then I let people know, hey, this is a good company, buy it, right? One of the thing like last week, you guys might see the GSX. You saw
Mhm.
that stock.
Yes.
Yeah, well, that was all part of the forced selling of that guy, Bill Huang.
Yeah.
Is that Deanna?
Yeah, GSX, the tech education.
Mhm.
Yeah.
These stock got beaten up like I from $100, close to $100. If you look at it, that from March 2nd, it was about over $100.
Mhm.
Now look at what it is. It's $32.
Yeah, but they were saying a lot of the traders were saying that stock was kind of a baloney stock to begin with. And they were wondering why it was getting bid up so much. And now they know it was because that guy was basically leveraged 20-1, and he was basically buying this. He was buying Viacom, Discovery. What was the other one he was buying? 10 Cent Music.
Mm-hmm.
Yeah, it was buying a lot of the Chinese stocks because
Mm-hmm.
I guess he's from China, and he knew what he could do with them, I guess.
Mm-hmm. But somehow when I look at their business, what they do in Ohio and the state, in the whole online education, the platform, this is going to turn around. I I don't think that it's going to stay like this.
What do you mean?
There are
Are
stock,
you talking about Viacom or
and the Viacom
GSX.
also. Yeah.
Yeah,
GSX?
but you see how the to me,
Mm-hmm.
you see how that it's taken. So GSX and Viacom, you look at their daily chart, right? And both
Mm-hmm.
of them, they have this precipitous 50% fall.
Mm-hmm.
And the amount of volume that they have, if they're
Mm-hmm.
going to bounce, they should have bounced, in my opinion. They should have bounced more than this for it to then come back and test as a bottom. The fact that they like went down and they're dead flat,
Mm-hmm.
I'm thinking they're going down again. That this is why I got out of my Viacom. I was
Oh.
looking for a bigger bounce, and she just got knocked down every day. Every day they just kept knocking her down. I don't know. I think when it has when like this stock is broken and
Mm-hmm.
there's more people that want out. I think.
What do you think, Nick? The L?
Are you asking me
Yeah, man, you are the
about
one pro here. Tell us, what's your
those
opinion
trades? About those specific trades or about the market itself?
about the GSX? Let's say GSX, Tech Edu, and the Viacom. What Nick is?
Um, yeah, I mean it's well if you really want to I can share my screen with you guys want and I'll share my
Hold on.
you guys dibble and dabble with
Let me make
options at
you.
all?
I enable it. Yeah, go ahead. You can go ahead,
Yes,
Al.
we have options.
You guys do options. Are you guys pretty advanced in options or you guys
Yeah. Yeah. I do not know others, but I am pretty advanced with option.
okay, yeah, I mean
Yeah.
So can you guys see my screen? Any
It's
chance?
coming. Yes, we see your screen.
Yes.
See my pen? All right.
Yeah.
Hang on 1 second. I'm not okay. So my trading strategy is a little bit different from a lot of guys. More specifically because it's firm based kind of trading. Bear with me for a second as I restart my pen. Sorry about that. I actually have to. I had this computer running for like 3 days. I haven't turned it off since. So I don't blame my pen if it's not working. But there we go. Pen. Where you at, pen? Pen. There you go.
I see you like also the
Yeah.
TD platform.
Yeah, I mean, I use a little bit. Can you guys see my smiley face, one each?
Oh
Yes,
yes, I
yes.
see your
Cool.
smiley face.
So like I don't trade. I'm not a technical trader.
Uh-huh.
I am technical, but I'm not a technical trader. I mean, I have my CMT3 license and all that, but
Uh-huh.
I don't trade off of technicals. The reason why is because the market itself, everything in terms of options are derived from something called standard deviation, and so
Yep.
that's the probability of trade. And roughly, if you trade within those probabilities, you'll be pretty profitable. So like, really, if you stick within the one standard deviation, is about roughly 68.27%, or if you're going to round it, like 70%. Two standard deviations is about 94. Three
Mhm.
standard deviations is about 99, right?
Mhm.
I never look, I mean, I'll consider a chart, if I clear this out, I'll consider a chart. I'll look at a chart and I'll say, okay, overbought, oversold. But really, most of my trades are solely based off of trade logic. And I do think there's actually more downside for Viacom to come, actually.
Yes. Mhm.
I would say, actually, roughly around 26 is kind of where I would see it at. But I do take a look at options order flow itself. I mean, when we're looking at the market itself, all right, there's an indicator I have. It's more so like looked at as like the options expected move. And pretty much like if you can see like everything in between this standard deviation or these red and green lines, or the way I trade is off of quant. Like I use quant. I'm a quant trader, so it's all mathematics with me and probability. And I don't even, the last time I even looked at a chart was like 8 years ago. But pretty much if you can actually see like the market and these trades will operate in coherence to like the one standard deviation when everything is well and said, like we're riding in between the red and green line. There's a couple times when we break out and a couple times when we break out. A better way to kind of note this would, let's put this on pause for just a second, but we look at the S&P 500 for example, and I go back as far as just last year and the COVID. Okay, when we are actually riding. So I'm a contrarian trader. Okay, I do quant trading as a contrarian. When everybody's buying, I'm shorting the market. This is the thing, is that when we are in market efficiency, everything is the way it should be. So those trend lines and those MACDs and those wedges that people are drawing, they're going to pan out and they're going to work. When the market actually breaches inefficiency, okay, all those wedges and trend lines really don't amount to anything. They don't matter. Like here we are breaking outside the expected move. Here we are breaking outside the expected move, the weekly range. We're out like 2 sigmas, 3 sigmas, 4 sigmas. This is, when I say sigmas, that's like, this is 1 sigma. This is like 2 sigma, 3 sigmas, 4 sigmas, like a 4 times move. What this pretty much means is that all hedge firms is a free for all. Nobody's really adhering to anything in the marketplace. Everybody's just selling. Everybody's doing what they need to do to minimize the risk. Retail traders and institutionals alongside. And so when I look at this and there's no efficiency in the marketplace, you really look at, in terms of the market, overbought, oversold. And I don't time the market. Anybody who's trying to time the market can't time the market. And, like what I mean by that is, I don't mean to like disrespect anybody in the marketplace. When I get asked a lot of people, like people ask me a lot of questions and they're like, what do you mean you can't time the market? I timed the market last week on the SPY. I'm like, what my example is this, is that you can't time $400.67. You can't time $218 and tell me when this thing is going to turn around at 26 cents. You find me a trader that can do that. They might get lucky once or twice or 3 times, but to do that on a frequent basis, consistently every single time, it's impossible. So a lot of the time, so I do strictly options trading, and I'm a contrarian, so I short the market. More preferably, I short the market because I'm usually long in my Roth and IRA to begin with, and I just find it more exciting to short the market rather than get long. I do get
An
asked a
eternal
lot.
pessimist.
Yeah, I mean it kind of gets my rocks off, but I get asked a lot from a lot of guys. They're like, well, the market's up 90% of the time. Why don't you get long the market, right? Because you have a higher probability. But here's the thing. I mean, did you guys know that the market is up 90% of the time, but when the market falls, we fall 4 times harder and faster than the amount of time that we
Yep.
went up.
For sure. That's where you're going to make the outsized gain on an option, because they basically have your options time to perfection on the moves up as far as decay and your time value that you're looking to make versus what you're losing as time goes on.
Yeah. So, and then, on top of that too, when you're dealing with options, all right, Vega is part of options. That's volatility and options. So, when we pull up the overall VIX, if you're purchasing an option, like who was trading options back before the COVID, you're seeing the VIX at a 17 new low. But here's the thing. I mean, if you're purchasing options right now, they're extremely cheap on the buy side premium. But, prior to the COVID, when we had that drop in the marketplace, volatility just spiked up to an 85. So like, I mean, I don't think a lot of people understand this, but the difference between the option put that you may have bought here versus the time frame of when you had sold it down here. I mean, like I purchased out the money options when I was at 340. We're sitting at I purchased the 325s, 330s. Those were out the money. They were going for about $200 or $300 a piece, 4 months out. This drop happened and they sold for about $15,000 to $25,000 a piece. That's the difference between the Vega. So like you get a Vega spike and a volatility spike, implied volatility in the marketplace when everything is crashing and pretty hard. So I've actually been short the marketplace since last year. And a lot of guys are like, dude, you must have been getting your ass handed to you because this is this is a crazy bull rally. But this is the thing. I mean, they don't call hedge funds for no reason. I mean, we're constantly hedging. And so if you guys are ever interested in this, I can show you this, but pretty much take a look at this, for example. I mean, here is an account. When you take your portfolio positions and you do something called portfolio beta weighting, and you beta weight your entire portfolio, you get to actually see it in the marketplace, which is this
is one of the things, some of the stuff I read on is they're big into this, is the beta weighting your portfolio to an S&P 500 index or the Russell, whatever you're choosing as your benchmark, that you want to be within a certain number of deltas of that, I guess, of the even line, right? Of being neutral, market neutral. And if you're too one side or the other, then you're at risk of a market move in one way or the other.
Correct. Yeah. So you got it, man. Dude, you're freaking advanced. What are you talking about? so here's the thing. I mean, a lot of traders, they're trying to time the market, trying to get in here for this move that's happening when it happens. A lot of traders are trying to time the market and get in here for this move that's happening at the time when it happens. What's the difference between professional traders and novice traders? They know the move is coming, and so what they do is they put the trade on somewhere up here, okay, in accordance for the move that everybody's chasing when it happens. They put the trade on somewhere down here in accordance to the move that happens. And so everybody's like, what about options? Don't options have time decay? And so what I'm trying to say is that the professional traders, they know the move is coming, so they just put the trade on somewhere at the top, and put the trade on somewhere at the bottom. They allow the market to come to them. All right. I mean, you got to consider here's 12 months plus of a rally. You got the XLF and the IWM up 18 and 25% year to date, and we're only in the 4th month of this year. I mean, S&P 500 only returns you anywhere between 8 to 12 in a good year.
Sure.
So,
but I mean, all of this is like a reversion to the mean strategy. I mean, this is basically what I know that you're doing this with options, but this is basically what I'm doing during the day with stocks. If I'm using something like a Bollinger Band, which is giving me 2 standard deviations, I'm waiting for that stock to move outside of the Bollinger Band, either to the top or to the bottom. And then I'm waiting for that, for other signs, or that capitulation volume spike. If NEO trades 200,000 shares on an average 1 minute bar, and it's in this downswing, it's underneath the Bollinger Band, and it spikes to 2 million shares, I know that the selling is done, at least for the next 10 or 15 minutes, and I can go in and buy like an animal for the next 10 or 15 minutes. And that's where I'm making, I mean, it's similar kind of It's the same principle, but you're doing it with an option, and I'm doing it on a much smaller time frame with a stock, I guess.
Yeah. So with me personally, any type of trade I get into, I just assume the full loss. That's it. I never put stops in. I don't use any stops. The reason why is because options are risk defined. And,
Right.
People are always like, well, time decay eats away at you, right? So like, doesn't that go against you? The thing with that is that you can actually utilize different spreads. And some of these spreads, when you actually take a look at it, if you look at the S&P 500, I mean, overbought, oversold, what would you guys say?
Hmm.
What do you guys?
Overbought.
Overbought. Okay. But we've been overbought here. We've been overbought here. We've been
Sure.
overbought, and still, like, if we thought that we were going to come down in the market, we wouldn't have been wrong. Right. So
Mhm.
the thing with this is to trade small. And what I mean by this is that if you understand the probabilities of standard deviation being 70%, 94 or 99%, I don't want to throw anybody off here, but this is the thing is that, but what it boils down to is your allocation. And so if you get into a trade and you risk $200, right? You risk $200, you risk $200, you risk $200. You do that across the next 10 trades. Just saying, for example, you risk $200 or whatever your allocation that you're comfortable with is. You risk $200, you risk $200. If you're trading within at least the one standard deviation, okay, then that means you're actually going to be profitable, 7 out of 10 trades.
Mhm.
Because it's one standard deviation is 70%. So if you trade within the mean of two standard deviations, whether or not your trade pans out in your favor or not, two standard deviations is 90%. That means if your allocation is on par, meaning that you look at something overbought, oversold, you put on a trade using risk defined spread, just get it on. All right. It's not about being right now. It's about surviving long enough to be right. And so,
Correct.
as long as you put on the trade, even if it doesn't go your way, who cares? You only lose $200. But one trade doesn't make you or break you. It's a number of occurrences over time that make you as a trader. And so if you're trading within standard deviation of, quants of 94%, nine out of 10 trades are always going to be profitable. And so that's kind of the backdrop between what I do. So,
So this is this what I was telling you about Mushi, the Dorian way. Do you know that, Al?
Hmm.
yeah,
This sounds a lot like that. They're basically putting on spreads that are starting around like the 5 deltas, which is giving you that 2 standard deviations for a month to 2 months, and you're going to win 90% of the time. But you're going to win smaller amounts, but you have a defined risk with your options, like you're saying. And if I win 90% of the time, and the time I lose, I'm going to lose only, I guess, 6 or 7 times the money I'm winning all the other times. Over time, you make money.
well, I mean, smaller amount, bigger amount. It all depends on what you're comfortable with. Well, here, check this out. You're actually correct on that. So like you can buy a single leg put. You say we're overbought, we'll buy a single leg put. How much does it cost? $800, right? So we can actually buy a single leg put for $800. I'm just gonna look at this one single trade. Take off the current ones I have. So it cost me 800, full rounded, $825. You can buy that for $820 and it's worth about 61 deltas, which means that out of what's delta, it's like
61% of the time it's going to finish in the money at that price, at that strike.
Well, it's if you actually look at it, if you were to buy 100 shares of the S&P 500, it'd be 100 deltas. So your option, even though it represents 100 shares, your option isn't really worth 100 shares. It's only worth 61 shares.
Right.
You could buy this option, or you could do a spread such as a vertical spread like 405 by 400, and take a look at that. And you can round this to 225. Now, the cost of this, you'll make less, but if you were to buy a single leg put, it would cost you 825. The deltas are worth 60. So what we do as a hedge firm is that if we want the same amount of replicative delta, we just buy more and allocate more. So we would actually buy, about five contracts of this, okay, to represent the same fractional cost of one single leg put. But this is actually going to minimize the risk substantially in a single trade. Because if you actually take a look at it, if we go from point A to point B, okay, let's say we go from the SPY drops from 400.
So in that scenario, because I mean, you're not buying it, and in this scenario, you're basically hoping that you're going to finish somewhere between those two deltas, where your 825 is going to go to nothing, and you still have something of your 225 left from your other puts that you buy.
Yes and no. There's criteria in which when you build a spread that you don't need to be in the money. For example, check this out. I got spreads all the way out here to 330, 347 out till 18 June. And I don't know if it's going to get down to 18 June, but the viable risk reward is there. And so when we look at this and we put in something like a standard deviation channel, and we can take a look at just where the two standard deviation is
Right.
year to date. If we look at this year, it says that we have a price target of about 330. So that's why my spreads are out here to like 347 and 330. Because
Right.
if you do fall in this direction, my price point of where I'm going to cover is going to be 330 and get out of it. But do I know if it's going to get there? I mean, I don't know.
But that's two standard deviations from today, and you're putting that on for June.
Yeah. So your question was, do you have to be below the strikes? No, you don't, because you can actually see that my strikes are 330 to 347, and they're out to 18 June. I actually just need to be below 392. And the SPY right now is 400. I just need to be below 392 to actually be in profit. So, and if we actually do get down to 330, I'll make about this trade. How much did it cost me? Okay. I mean, if we look at this, the trade itself for this trade cost me roughly 76 cents, 76, or actually the S&P 500, I apologize, $124. So if you actually look at this, and if I were to replicate this trade, create closing, or show you that if I were to replicate this trade, I paid $1.24 for it. All right. How much would I be risking? Well, sorry, that's two contracts. So one contract, I'm risking $124 to make $1,500. So like this kind of goes to the allocation. You risk $124, you risk $124, you risk $124, do that 10 times, right? Probability overbought, oversold, it doesn't matter. It's not about being right now. It's about surviving long enough to be right. Because here's the thing, if I'm wrong on this, I'm wrong. But if I place my trade within a two standard deviation area of 94%, 9 out of 10 trades are going to be profitable. Now, I don't know if I'm going to get the full 1,500, but I know that 94% of my trades that I take that are costing me $124, all I need is one winner to wipe out all of the losses, because
Right.
it's such a small allocation. Here's another thing too. Like you look at a trade and you do a spread, and we do like the 405 or the 400 by like the 390. So like if you look at this, yeah.
When you're doing that though, like if the options are, let's say, if the options are you looking for options that are giving you if the price of the premium that you're writing for the option, or you're buying for that option, are you looking for that to basically be outsized to the probability? Or because if the option is priced perfectly, then it would say that it's going to cost you exactly as much money as you to be right one time, and then you're in a zero-sum game. So where are you at? Like, where's your edge coming from? Are you also hedging that when you purchasing that? Are you doing other strategies to mitigate the amount of money you lose those 9 times?
So here's the edge right here. I mean, if you look at this, for example, what's this? This is a $10 spread, right?
Right.
So there's actually criteria in which I have, if you guys are interested in having, and I'll give it to you. It's right here. You guys can have it and take a screenshot of it. But when you're buying a $2 wide spread, don't spend more than $1.05. When you're buying a 250 wide spread, don't pay more than $1.30. If you're paying a $10 wide spread, don't pay more than $5.20. So if you look at this, is what, 400 to 390. It's $10, right?
Mm-hmm.
You don't want to pay more than 520. Why? Because if you actually look at this is a $10 wide spread, and you don't want to pay more than half. So your edge comes from where you place the trade on. That's one thing. Two, your edge comes from you're risking 1, or in this case, this is actually going for less than 1. This is going for about half of 1. So this is like 0.5. Okay, and you're making 2. So you're always risking 1 to make 2. The thing with this too is that here's another edge. This is another edge. I mean, take a look at this, for example. If you're looking at the single leg put, your thing was like you don't make as much money. You can see that I'm actually allocating 5 contracts to make the same equivalent in terms of delta. So this is actually worth more than this single leg contract, and it's safer and it costs less. So if we actually take a look at it with the single leg contract to get down to 380, okay, options have a dwindling of time. So you get burnt up by time decay and data decay. So you're going to lose, or you're going to make about 1,700 if you move now, right? But this option actually expires on the 3rd of May. So let's just go forward. We don't have to go all the way down to a 3rd of May. Let's just go down to maybe like Wednesday, the 28th of April, right? A week out between the 3rd of May. And if you get down here to about 380, okay, you'll make about, well, you'll be deep in the money by then. So, but my main reason for bringing this up is, hang on one second, if I can actually show you a good example.
So this sounds like a lot of things I've read have said that, like, when you're trading options, that it's actually good not to hold them to expire. You want to get out somewhere around like 9 or 15 days, because then you don't suffer gamma risk.
I mean, well, gamma risk, theta decay, you're going to be eaten up by theta decay no matter what. Here's an example, is that let's see if I can actually show you real quick. This is an out the money option. I bought an in the money option. That's why it's not really showing you what I want to show you or convey. As long as you know that pretty much, options have a dwindling of time, which means that, hey, check this out. So here's the 360s. If we get down to about 370, you'll make 563, right?
Mm-hmm.
Right. But if we this option expires 3 May, if we go out to about 28th of April, like a week out from expiration, if you get down to roughly about, what was it, 5 or 360, right? I said you're not gonna be making $500. You're gonna be making actually 248 if it's actually in the money, and if it even gets there. Sometimes like price of the stock goes up, down, up, down. Even if you are in the money, chances are by the time you get to that price target, you're actually, you might be, the option itself might be decayed, right? It might not be worth anything. And so the reason why I bring this up is because, here's an option. If we get down to, here's 428, okay? Just want to show you like what the verticals do, is that here's April 3rd. If we get down to about 370, right, in a single leg option, you'll make about $2,600, okay? By the actual 28th, okay, of this month, a week out from expiration, you get down to 370, you're not making $2,800, you're making more like 2,600 because of time decay, right? So here's another thing. You take a look at this is the vertical. And here we are, April 3rd. If you get down to 370, you'll make about $1,300. Not as much, but this is the thing, is that if it takes longer, because you never know what the market's going to do. It's going to fluctuate up, down, up, down. It might go all the way up, come all the way back down. By the time you get down here to the 28th, okay, of April, all right, a week out from expiration, you get down to 370, you'll be making about, hang on one second. I got to reset this. Oh man, it's because the MTOS.
So do you have rules as to when to take profit?
Yeah, so I always target 30% to 65%, but my main reason for bringing this up is because you actually will make more and subside time decay and volatility against you. That's the main key. It's that, when you're doing a vertical, it doesn't matter if the trade goes against you. It just needs to be below the strike that you're buying and selling anytime between now and the expiration date, and you'll be profitable. So
right.
That minimizes so much of the risk for a lot of guys that are trading options, because the two things that kill options traders are time decay and volatility.
Sure. But so I mean, but in this case, but you're putting on these verticals very close to at the money.
So the thing with this is that there's different ways, like for the S&P 500 contracts I have on, no, because I foresee that price is actually going to be down in this area somewhere between now and the expiration.
So this isn't credit spreads that you have, because you are short you're short the smaller strike.
No, they're not credit spreads. So there's debit spreads and there's credit spreads. So like preferably puts are better the verticals are better to be done on the put side for debit spreads. And the reason why is because you can actually expand the volatility when the market starts getting up to, like an 85 VIX, and you'll actually be pinged out the trade a lot more quicker. Like sometimes you do not need to be below the strikes because volatility is so high in the marketplace. A credit spread, well, if you're doing a credit spread, the vice versa from doing the puts, you could do a credit spread. You can do a credit spread by selling a call and covering with a strike higher. And so
right.
With this spread, you're not going to benefit from the volatility inflation that goes on in the marketplace, the Vega. Instead, you're actually just going to benefit off of time. So
Right. So, I mean, but so then is your writing and buying of your spread situational based on the VIX? Like if you're looking to initiate positions and the VIX currently is 40 or 50, wouldn't you want to only do credit spreads then? Because you know that most likely over the next whatever time that you're doing this, the VIX is gonna be lower.
Yeah, I mean, well, preferably, yeah, I usually do credit spreads. I sell credit, I sell premium when volatility is high. If anything, if you want to do debit spreads, you can actually do something that prevents you from getting crushed out would be like a butterfly spread. Like you can take call or put in a market with high volatility. Why? Because it's actually subsiding the vol crush, and all you have is your direction. So that's another way to kind of take it. But yeah, I mean, like there's different things you can do. There's all these different spreads. You can even, if you're planning on actually shorting Home Depot, what you could do is you get into Home Depot and you can actually do something where you get out about 48 days out. And if you believe that it's going to go down, okay, what
Hmm.
you can do is you can sell a 305 put. And what you can do is you can take pretty much just get the calculator out, take 800 or 805 divided by like 3, and you could actually find a 268 put. Okay, 268. They don't have a 268, they have a 265. So you can actually buy 3 of these. And so you actually have a somewhat of a back spread. And if you actually do the math, what's 307 minus 22? 22 is the range in between now and expiration. All right, so we take 307 minus 2250. Okay, it brings us down to about 284. Preferably, you would want to build a spread in between where the current price is at and 284. We're all the way out here at 265. I mean, it could work, but like if you're going to do that, we have to kind of trade a little bit higher. So I just want to show you an example. You get in here, you sell the 325s for about 2K, and let's see, we can actually buy 3 of these. Okay, so check this out. This is pretty cool. You might like this. So like the expected move, the weekly range between now and this expiration is $22 plus or minus. That means we can move up $22 or we can move down
Yep.
$22. So you
Hmm.
just did the math. 307 minus 22 brings us roughly to about 285. So we're trading 325 to 290. Why? Because if we're going to move downwards to 285, it's actually going to undercut the 290 and put us in profit in the money. So if you take a look at the spread, this is kind of how hedge fund managers trade, is that they have a logic, they place that logic between, like what makes sense, sector rotation or whatever. Yours is like we're overbought. And then they execute the trade using a way to minimize the utmost risk while allowing them to benefit from the downside. So if we move down, okay, pretty much between now and expiration, this goes down to 21 May. So we'll just move the clock forward to like 21 May or like 19 May. So like if we move down, okay, in Home Depot, you'll make unlimited amounts of money. See that? Okay.
Hmm.
But if Home Depot continues to grind higher, you actually get to collect upwards to $955. So you're hedged on both sides, meaning that if Home Depot rallies, you make $955. If
Hmm.
Home Depot drops from being overbought, well, you make unlimited amounts of money, and you're trading within that area of
But it has to. But at that day, it would have to be down underneath 276 for me to make money. Right. All up until there, I am actually negative.
Well, you have until 21 May, and the chances of you actually being outside of this area is higher than 70%, because that's actually what the market is pricing in. It's pricing a 22.57 point move at a 17 VIX. So you're actually getting better premium and gamma in accordance to the volatility. Implied volatility is about 25% right now. That's pretty good for Home Depot. That's not including volatility that spikes. So you may not even need to be below the strikes. You're not going to hold
Right.
this.
Because if it happens earlier than that time, then I still have all my time premium. Right. If you take and move the calendar to, if that happens, if it only goes to 285 a week from now,
Mhm.
I should still be.
You should be profitable. Yeah.
right? Can you, can you change the date on there to see, will that calculate it or no?
Yeah. What day do you want me to change it to?
Like a week or 2 weeks from now.
Oh yeah, a week or 2 weeks from now. Sure. So today's the third. Here we'll move it to like 19th. So
Yeah.
if we get downwards to this area 287, then then it would actually provide you profit beyond this.
Right. So yeah. So if you put this trade on it, but it happens quickly, it only has to get to 287 for you to make money there.
Yeah. Well, here's the thing too. You would never hold this trade out to expiration. You usually want to close it 30 days out. But let's say you don't want to suffer the risk of you don't want to suffer the risk of having to die in between these two areas. So how do you decide that? Like, kind of picking your brain a little bit, but how do you get around that? How do you get around from not getting killed in between this two area point? Well, we have a 277 and it's 315. So what's in the middle? Probably about 295, maybe 290, right?
So you're going to put a spread that's around the 295 strike.
So what we could do is, preferably you can get out, and you could say, hey, look, let's get out because pretty much butterflies increase delta and increase the overall position as you get closer to expiration. If you're out here, where do we put that trade? 21 May, you can actually get at least 30 days out from expiration. Pretty much, if we're in 21 May, you get 30 days out. So 7 May, for example, and you can, because that's when you would want to close out the spread, and you can actually build out a butterfly spread and do something like, check this out. You can actually do it. What was that? I'm sorry, I can actually just do this. Boom. This is between 317. So we'll just say 315. Okay. 315. And this was 295. Okay. And pretty much, let me take a look at this one more time. This is 276. And what you could do is you could place a butterfly right in the crack of it, 276. They have a 275, 277. Let's see if they do 277. Okay, so they allow you to do it. So, what's this doing is pretty much your risk in the back spread is in between point A and point B, right?
Mm-hmm.
If you die in between that spread, 30 days out from expiration, your butterfly will actually reap you the benefit of pretty much you're risking $23 to make a max profit of $1,900. So if you die anywhere else, you make the most money at 295 in the crack of the middle. But if you die anywhere between 315 and 277, which is what we throw in the back spread ratio, 315 and 277, if you die anywhere in between here, you're going to make money. So, that's your risk from point A to point B. We're putting on this butterfly between point A and point B right in the middle. So it doesn't matter what happens to the spread. It's $23 of insurance. You could probably fill for like 25 or 20, but $20 of insurance to provide you an upwards cost of ensuring this trade from you not losing anything. If we go this way, you'll make $955. And if we die anywhere in the middle, well, you're going to make money.
So this is definitely a little more advanced than what I'm used to. I mean, I'm with you about half of the way, but this is definitely very interesting to me.
Yeah, I mean, like it's,
what kind of returns do you make on your portfolio over a month, or what is it like your targets?
I don't like to brag, but I mean, it's you can Google my name, man, and you'll see what it comes up with. But like in the COVID crash alone, it was out of a $3,700 investment. It came out with over 480K in the drop. So that wasn't too bad, and it was actually pretty safe. And then also, like, you might so your question earlier was like, so do you hedge? What's your edge? Like, here's the thing. I mean, I short the market and I look at everything from a standpoint of like overbought, oversold, and fundamentals and all this other stuff too, along with it. But I short the market. Everybody's buying right now. I short the market. Why? Because from a standpoint of momentum trading, and with me dealing with 750 mil, you can't get into a trade with $1 mil or $2 mil and have it go up $1 and sell $1 mil or $2 mil at $1 later. Like it's just not enough liquidity in the marketplace, especially with volatility at all-time highs. and the bid ask spread's extremely wide, right? So it's unprobable to do that. But you know, the thing with me is that I short the market, and I only trade within liquid products. But here's the thing. I mean, you asked earlier, I said, what's my edge? I mean, here's the thing. You take a look at this portfolio, and so a lot of guys are like, dude, how do you stay short this entire time as the market is running against you? You got to look at the probability to go up versus down, right? So the probability from this point to go up might be about like 5 to 10%. The probability to go down might be about 80 to 90%. That's the bigger picture. Don't lose, uh, don't lose view of the bigger picture. That is the bigger picture. All the funds see it. Every single Wall Street cat out there managing a huge portfolio understands it, right? That is the big picture. So what are we doing? We're shorting the market as everybody else is buying. And why? Because we know things are pretty bad. So we look at this, and here we are, and the market continues to grind up higher. So if we drop from this point, you know, if we go down 10%, I'm going to make about $5,000. All right. But my goal is to try to take this down to about 330. So we, you know, get into this area, I'm going to make about 10 grand. This is one size portfolio, by the way. I actually have a number of portfolios, but I'm using this one as an example. We go down 10%, I'll make $5,000. If we go up 10% in the S&P 500, I'm actually going to lose, but I don't want to lose. So what do we have to do? Well, you can get out, and this is where it comes down to boiling down your delta in accordance to the risk within the marketplace. You can get out, you can go buy futures contract, and you can just hedge off this. And you can buy one futures contract. And so if we go down 10%, I actually make 3,000. We go up 10%, you know, I make 610. So 610 is a lot better than making $610 is a lot better than losing 1,500. If I really want to even out the delta, I just buy two contracts, and there we go. We go down, I'll make 1,200. If we go up, I'll make 2,600. It doesn't matter which way the market moves. So the thing with being a hedge firm, or, you know, doing hedge fund trading, is that when you need a hedge, you put it on. You don't need it, take it off. You need it, put it on. Don't need it, take it off. So that's kind of like, you know, how we
I hear you. So do you I don't know, I guess you don't teach this, or you don't actually show this. This is really.
Yeah, actually, I do teach. I have a trade room too, if you guys want to join. I used to be the lead swing trade instructor on a site called warriortrading.com.
Oh, Warrior Trading. I know Ross.
Yeah, I used to be the lead swing trade instructor on their website, and I left in 2018. But I no longer trade that way. And you know, like, the reason why is because when I went on board with Goldman Sachs, they have a no compete rule, which means that, you know, when you have your Series 77 7's license, you can't trade anywhere else.
Sure.
Because, you know, it's like FINRA regulation. But so I left for that, and, you know, I do teach, but I teach more so like individually. And if you are interested, you know, we could talk on the side, but, you know, it's just like, you know, I just came here to kind of shoot the shit and hang out with you guys. That's all.
I hear you. I think you're definitely way higher than you'll find the people that we're trading with.
Yeah, I kind of feel like I bored Muhammad and Sonia. I went on talking, man, but, you know, I was trying to avoid that, you know, and I didn't even answer your Viacom question. The question was Viacom. So here's the thing, it's gonna go down a little bit more. So it's gonna go down. Like
it's gonna go down more, right? We see the Viacom GSX, you know, like what you said, that, you know, technical chart tells, you know, it's going to go down more. So we see that the trend is in that direction.
So, you know, like I said, I don't trade within trend or anything like that. But if we do look at Viacom and these stocks right here, the thing with this is that you see heavy, you know, offloading of institutional sides buying, and I mean selling. So I mean, you might catch a buy up. I mean, just overall, if we take a look at this, you might catch a buy up, and this price right here is likely going to revert to, you know, actually, no, it's probably going to drop down to about 41. Yeah. I would say do not buy this until it gets below 41, simply because there's no institutional trade in between this area right here. We're at the medium point. I'm a contrarian. You know, I don't trade for medium points. I wait till a stock gets oversold or overbought, and I get into the trade. That's me. Like I wait, and if it doesn't get there, you know, that's what it does. But, you know, you can't really consider the overall volume profile to be considered institutional, because the market cap and overall, it's been the market cap's still sustained, but the whole entire thing with the shares offloading, there's more outstanding shares is what I mean. And so you're not going to see like until you have a higher spike of volume, which means that you say, let me zoom in. Here's a high spike of volume. Until you actually get a high spike of red volume coming in, that's kind of where you know that the actual shorting is complete. And we haven't had that yet. Second of all, is that the stock itself is not abiding by actual, range expectancy. I mean, for this week, yes, it was, but it dropped outside of expectancy the week prior. And so what this means is that until a stock begins to start to break outside of the range to the expectancy, that's where firms will have to do something called stat arb. And it's statistical arbitrage. It's looked at as like dynamic hedging, which means that firms that are correlated in a certain stock altogether that are holding the stock will have to buy into further buying. So that's why it's actually like if we break outside the red range, firms are going to have to sell into further selling. If we break outside the green range, firms will have to buy into further buying. We haven't broken that range to the upside, so there's no buying. The stock itself is still, you're dwindling right here. You haven't had a green candlestick at all whatsoever since this day. I would wait until it gets down to about 41. And look, I mean, I said 41 before I even looked at this. Like this other indicator right here that tracks the institutional flow. You guys are technical traders, so I just bring this up for visuals. When we look at this from a 30-minute standpoint, it's at 41. That's on institutional volume flow. When I look at this from a quant side type of trade mentality, when we look at this from a weekly range expectancy, this right here is at 41. So don't buy this until it gets down to 41. If you buy it once it gets down to 41, chances are it's going to bounce and rip higher. And I use Fibonacci's, but I don't use Fibonacci's as everybody else. I use Fibonacci's in terms of like track bar, like looking at things. If you guys want the levels, I'll give them to you. But medium fair value, when we look at this in accordance to where fair trade has been trading in Viacom over the course of the last 2 days or so, is roughly around here at like, fair value price prior to the drop was like 70. We dropped through 70. And so fair value price right now for the stock, if we go back to it, is roughly, it's still sitting at 70. So until we do break the weekly range, I can't really tell you where fair value price is going to be. But I will say is that, if we do get down to 41 or let's say 39, I would definitely buy it here at 39 or 41 if you guys want to do that. And, have this thing, possibly sell it up at 47 to 52. That's where it's going to go. It's going to go to 47 or 52. And if you don't, like if you guys want to write this down, it's fine too. 41, pick it up at 41 or 39. Okay. And this is where a lot of that dynamic hedging is going to be heavy at and be purchased at. And so once you do that, I would sell it. It really, there has to be some sort of catalyst that comes out for the company, but if there's no catalyst, where it's probably going to go is maybe a dead cat bounce to 41, maybe 44, and then another leg lower. All right. I mean, personally, I just want to even trade this crap on a dip buy, but if you really wanted to, what you could do is, let's see if the options are liquid. I would wait and probably go out 34 days and check and look at the spread. And if you guys wanted to pick this up, let's say the stock did get down here to 39 or 40, what I would do is I would open up a call spread for, let's say, imagine this, like right now, if the stock was at the price where I wanted to pick it up, we're going to use 44.64 as an example. If I wanted to buy it right now, what you could do is, buy the 44. And I mean, the spreads are a little bit wide. I wouldn't recommend it, but let's see if they actually have anything else here available. Okay, so the spreads are wide. So if the spreads are wide, you want to be using something that narrows with time. So I would actually go out, if this is going to be a quick trade, about 20 days out, and I would actually sell, a put and cover with a put. Okay. And this trade right here, because the spreads are wide, 236 by 264, that's 30 cents for a $44 stock. I don't want to buy that crap on a debit spread, but I'm going to use a narrowing spread. Okay. Like time in my favor, because as long as it's going in that direction with time in our favor, that's going to narrow the spread so that you can actually get out of the trade easier. Because when you buy something, you got to get rid of it, right? So this right here is about $50, and you'll be risking 50 to make 50. So if you want, anticipate to make about 30% of this. So, I would allocate about, I would buy about 4 of these, maybe 5 of these. And you're risking 250 to make 250. It's a 1-for-1. That's not bad. But you're never going to make the full amount anyways to begin with, unless you actually close above the strike. So my thing is that if you purchased 5, if it's already up above in profit, so let's say you make $150, sell 4 of those contracts and then leave one of the contracts on, and then just let it expire because you've already taken back your gain. But I would look for about a 30% to 65% gain in this. And so if we actually look at this, I can't really validate and show you guys like where the actual sell price would be because we're just hypothetically doing it at this price. But you could actually see that as the days go by, data decay is extremely high 20 days out from expiration. So once you get to about 13 days out or less, chances are you're going to be pinged out the trade, if not sooner. And you can anticipate that there's going to be some sort of high volume buying around 39 and 40 up here in this area. There's going to be some high spike in volume that's actually going to push you upwards to 47. Chances are that if you do get to 47, even if we open up the spread right now at 44, if we did get up to 47, you still make about 50% of it, over 50%. So if you can imagine doing it at 39 or 40, chances are you're probably going to make about 65 to 75% of it prior to expiration. And the longer you hold it, as long as we're above the strikes, the more money you make each day that goes by. So, or if you actually wanted to play this out a better way, you can actually.
So Al, I was just thinking, if you do the sell 2 of these put on 39 and then do buy one on 44, it's just ahead. Let's say you are selling like 40 days ahead or 45 days ahead, 39 put and 2 of them, and then you buy one call on 44 and
you mean like
time. Then you are kind of financing it with your sell leg.
Yeah, you can do that. I mean, yeah, you can absolutely do it. I mean, the one thing with this is that your spreads are a little bit wide, but it's definitely doable. You can do that. The vertical spread's one way, credit spread's another way. I would personally, looking at the IV, the
Right.
IV is actually inflated about outwards to 20 days, where it's 71. And when you get outwards to like 9 April, it gets crushed. You get crushed down vol about 3%. What guys don't know is that actually 3% and actually IV is about like 30% overall in actual VIX. They don't get that. So like you actually do get vol crushed. So what you could do is, if the price targets are 47 to 52, you can actually do a theta iron condor where you're selling premium on the outsides of these 2 areas right here, and do it 20 days out. And chances are you're more than likely going to make money in it. Just like selling premium at like 35, covering with the 36, selling premium at like 53, covering with the 54, and just allowing whatever happens in the middle to just do whatever it needs to do. And you're going to make money in it. That's another way you can play it. You can do a butterfly contract right now and just place it in between these 2 areas and make wingspans, right, in between these 2 areas. And as we just wiggle back and forth, as long as we get upwards to here, 45, 47, that's where we'll put the body of the butterfly, sell it as close as you can, to expiration, and you'll make a lot of money. I'm just trying to think of different ways to execute this. But I mean, overall, I see the market going down, so I don't buy crap in this. I don't buy crap in this market, man. I love trading, man. It's just, I love doing this. It's awesome. I love that you guys are into it too as well. But yeah.
So as a professional trader, Al, what time do you guys usually find is most for you? Just you do it and go for coffee and then come back. You just, all the retails are out, flush out, and then get back in again.
Yeah. So if you actually check this out, I mean, I put the trades on. I don't try to time the market. I don't try to, buy dips or just try to get out or worry about it. Why? Because anytime I buy an option, I just assume it's gone. Why do you want to assume that your capital's gone? I keep the allocation in line like how we spoke of, but it's gone. because it doesn't matter if that trade works out. The probability of majority of my trades are going to work out, right? So your question, like how long do I trade and what do we do? I mean, when the market moves, when the market moves sideways, I want you to see something that here I actually have a number of BS orders right here. It doesn't stand for bullshit, but it says for buy sell, because these orders are here constantly working. And when they hit those profit targets, okay, I know where they're going to go. They're going to hit these profit targets if they undercut the price zones I have. And so it'll just sell me at 30 to 65%. That's I'm consistent. I actually have a Discord channel too. If you guys want in, I'll send you guys an invite, but there's opening, it's free. Opening trades, closing trades. Most of the closing trades we have are like 30%. Here's one for 250, but that's a rare occasion, but 30%. Sometimes we hit out the ballpark. This one's break even. Here's 41%. Here's, pretty much, this is 110%. This is 30%. This is 30%. See, it's just consistent.
So Al, I got to take you out on the boat to go crabbing so I can pick your brain more, and I'll send you home with a bushel.
Hey, let's do it, man. I got fishing poles. Let's do it, man. Let's do it. So if you guys want to join in, I mean, by all means. Actually, it's pretty cool because
Hey Al, I shared my phone number here,
oh,
and Nick and I, we are, like I said, we are like-minded people.
Yeah.
We do this. We have over 5,000 people also in our community that people are learning. We are learning from each other.
Mhm.
And then we have got a strong folks are from Maryland and then Virginia. We gotta have you, join us also. Okay.
Yeah, definitely, man. Here, let me give you guys my
I shared with you that my phone number. Nick is there's Nick number. You share your phone number, and we have also Discord group. Do you use Telegram, Al?
I have. You're not the first person that has asked me to start a Telegram. I actually was considering doing it, but I don't really have that many people, messaging me on Telegram. But if that works for you, then by all means,
In Telegram, we do that. Actually, we are now. We have a Discord group also.
Yeah.
Is your name Al, or is AL your initials?
It's Andrew Lem. So
Andrew Lem.
Andrew. Okay.
But you can call me Al, or you can call some guys just call me Drew. But I
Drew.
put Al because there's like I said, sometimes I walk into a room, I don't want to take over the room or brag or anything.
No, that's okay. No, we don't. We always look for.
Are you known? I guess if you worked with Ross at Warrior Trading, you're a known guy. I've never heard of you. I don't know. So,
no, that's cool.
I can tell. I can tell from you talking that you definitely know what you're doing.
Yeah, it's, so the thing with that is that if you Google my name, it's gonna come up with a bunch of articles, and they're good articles, but just sometimes if I put my name and some people Google it, they're sometimes when you meet people, the mentality changes when they find out how much you're worth. So I just try to keep I'm just a normal guy, man, just doing this in front of my computer. So, but it's cool. So that's probably the reason why. I mean, and then plus most of the stuff the content that was out there when I was with Warrior Trading, I was asked to get it removed from Goldman Sachs because of when you're working for their firm, they don't do a non-compete kind of thing. Everything else has to be publicized by them if they put anything out, because it could have short trader shorts Home Depot, and then all of a sudden for Goldman Sachs we're buying Home Depot, so it's the guy's managing Home Depot's portfolio, so what's he doing? So it's so they ask you to remove all that stuff before you even start with them. Yeah, but I mean I'm always down. Most of the guys in the Discord room are hedge fund managers, and if you guys,
I definitely would like to join.
Yeah,
I mean, I'm definitely a newbie compared to you as far as that goes. I mean, I did trading a long time ago, though. I did, I was a SOS bandit way back in the day.
Well, honestly, I mean,
actually, if you watch Kramer, if you watch CNBC all the time, a lot of times, on Fast Money.
Yeah.
Josh Brown from Ritholtz Capital Management.
Uh-huh.
I sat next to Barry Ritholtz for 2 years and traded with him when he was trading stocks for teenies for freaking $60. Okay, so if you know who Barry Ritholtz is, I sat right next to him and traded with him 2 years. So I mean, all the way back then, and he built a, he's got a very nice company now.
Yeah.
But
I mean, dude, if I mean, I'm free pretty much tomorrow. If you want to do so, I'll drive up to you. I'll come hang out with you if you want. But or we can
cool.
go. We can plan a time if you want. I didn't know you were
You
so.
play? Do you play golf?
Actually, it's funny you mentioned that because I wanted to get into golf, man.
Well, if you want to see, I actually have a golf team. So my day job is I want this is what I want to transition to is to do this full time.
Yeah.
And so I actually am a software developer. I have a security clearance and I work for the DoD. So where I am is right next to Aberdeen Proving Grounds up here in Maryland, right? And yeah, so we actually have a huge golf league up here. It's like 80 teams, 5, 6 guys a team. They play every week. And so I only have me and my brother on my team. But if you want to join, no problem. And I'm not a bad golfer. I can shoot in the high 70s to low 80s. That's pretty much where I'm at.
Yeah, I mean, if you want to teach me golf, I'll teach you trade.
Hell yeah, that's a deal. All day long.
Yeah, I actually used to. I had a house on a golf course, and it's in Maryland. It's called Beach Tree. I don't know if you heard about it, Beach Tree.
No,
But,
I don't know that one.
more like an Upper Marlboro area.
We live right next to Bully Rock, which is it's like one of the top golf courses in Maryland, Bully Rock.
Dude, I got to come up there, man. It's been a while since I've been in Maryland. Dude,
Yeah, I was looking at jobs down there. I've been looking at it's tough for me to go down there because it's so much more money and the traffic is horrendous and I really don't want to have to do it.
oh, dude, you guys shoot me. Is that your Discord, Mushi?
Yes, we have a Discord. I share with you the channel. So
Mhm.
what I will have to do that Nick, okay, Nick already there. I have, as I said, we are running with all the volunteers. So Andrew, you go by Andrew or Drew?
Oh,
Al.
yeah, Drew Al is fine.
Drew is a
Drew.
Drew you feel comfortable with, right?
Say again?
You comfortable with the Drew?
Yeah, Drew's cool.
Okay, Drew.
Yeah.
So what we do that I have a group of folks that the volunteers, we all help each other. Like I said that if you can see on website, let me share with you that website. That way you kind of see, you can browse through it also. Sometimes you see my desktop, right?
Yeah. Oh,
This is the website urbanhood.org. You'll see that, and then here on the upper right side, Telegram and meetups and this groups. But this is all, like as I said, when you come to website, you'll see that what we do is watch this video. It's gonna gives you idea. We have been also on TV a couple times, just what we do and on the COVID-19. The money I generate, like I said, for this cause, it goes to 100% to support for the food cause. So every week we do 170 families, and the 170 families are part of the program that, and it costs around $8,000 a weekly basis to take care of it. The money we generate through this program, it goes to this here.
nice.
Plus, then what we do that we have $2,000 of the services we got. Dark pool, you already know, flow algo, dark pool, black, the trading services also we got from bunch of others. So when we get those information, we feed back to the community, the people who is part of the paid the members here. Okay, here you see the gold and platinum. So I know that Nick also, I offered this to Nick also, that that if you can fill out any of those form, just do the free membership. That way, that my team is going to onboard you there. Yeah, and then one of the thing I say that the Al, the Drew, you and Nick, there are other people that teach the people. There are so many people I know that in my community keep asking me, okay, how did you do that? This is what I did. I love now trading just because it just on through COVID. There's nothing to do so besides doing this, and then the stock market. If you know the game, you stick to your game.
Yeah.
Like I said, I strictly the trade based on the news and momentum, and then certain trades I am my long term and short term. I invested in hedge fund, in VC, and also many other investment I have. It keep printing money, but you cannot leave the money in your bank and hoping that it's going to go higher and higher. So
Right.
we keep always encouraging people, whatever you do, spend some time. Trading is so much fun. We're going to say, is money that easy? It's all like, don't go too many strategy. Just figure out what you like to do and stick to one or two things.
Right.
Nick has a strategy. It works for him. Why keep changing it? He's keep printing
Hey,
money every week, right?
sometimes there's a better mousetrap,
Yeah.
and I think that Drew could probably teach me something better about the mousetrap. But tomorrow it is going to be 66 degrees out and sunny. So if you want to play golf, Drew, you come up here. I'll take you out for golf and we'll have a talk.
Yeah, dude. That sounds like a plan. I mean, I'm not doing much anyways. I just broke up with my girlfriend, so
Oh, I see. So you got lots of time.
oh yeah, so bro time would be nice, man. It's just, I don't really have too many friends, man, but it's good to connect with those. I just joined your Discord room, by the way, guys.
Yes, I did also to yourself. So what I'm going to do that, Drew, that I'm going to have, I don't have that access. I have volunteers, he takes care of all this. He's a cop, and Nick knows. I'm sure Nick is going back and forth with him in certain things. If
Yeah.
you can fill out that form, that my the
I filled out everything, by the way, Mushi.
but
I filled out everything.
he told me, Nick, about you. He said, you did not fill out your Discord and the Telegram one. He
Oh,
said,
so
look,
I did, because I didn't have Telegram, but I got it now. So
now you got it right. Yeah, he
my
told me
tele
that.
I can give it to you if you want. It's
No, no, yeah, I see that you joined the Telegram group. I see that you
yes,
joined it,
yes.
and
I
so,
joined it, so that one
yeah.
I
So
joined.
now I will talk to him. He as you know, since he's a cop, right? He just a Mushi. He didn't give me that. Look, I can show you. I proved it to you that I said, I don't need the proof. I know, Nick. I see that. So what we do that Drew, that every week we meet like Sunday night, tomorrow night, 9:30 p.m. You'll see that on the meetups. Sunday night and Tuesday night and Thursday during the day, midday, we come in, we just share different topics. This coming Tuesday, we are going to be talking about the crypto. So we know now every 2 month in Tuesday night we change. Some month we talk about cryptocurrency, some month we talk about different topic about the stock, your long-term stock, short-term stock, or some month we do some strategies, right? Or sometimes even real estate on Tuesday nights.
Yeah.
And there we kind of try to bring people who is basic level, try to get them join us at least in the free community or paid community, doesn't matter. We just tell, don't sit in the house, just learn that these are the things you can do. Learn whatever makes you happy, right?
Yeah.
And then on Sunday night, we talk about the things, what am I looking into buy this coming week? So we kind of go through, hey, these are the stocks I have done some research. And then overnight and tomorrow you'll say, what do we see that happening this coming week? We touch up some economic factor and we touch about the stock, this we think this week might move up, right? And
Yeah.
then people can decide want to ask him some questions, we let them ask questions. So we have couple guys, we go around, we share what we are looking at, and then people give the floor to people if they want to ask any questions. So
Interesting.
you're welcome to join. If you are 9:30 p.m., you'll see that in the meetups, all
Yeah.
those links are there.
I'll come hang out with you guys. I mean, we should do a futures trading room too, like trading
Uh,
futures on Sunday.
Actually, I have a group of guys, who is full-time traders, so like you guys, and that who is also kind of teaching back to the community.
Yeah.
So I'm giving them access to some of the paid tools that what we have, and at the same time they're teaching back to the community. So
Yeah.
it's the way to you're giving back, and at the same time I'm not asking you guys pay me the money and stuff because you guys are way or advanced and stuff. But it also brings the community together, and others also learn from different perspective. Nick sometimes can explain something much better than I am.
Yeah.
By all means, this is what it makes us better, right? Nobody knows everything. Like you said, Drew, that you don't try to time the market. Nobody can time the market, but it stay invested. So whatever you do, a bull upside or downside, stay
See,
invested.
that was the thing I said. So a long time ago, a guy, he taught me a much simpler option strategy than what Drew is showing. And he told me, he goes, stop timing trades and start trading your time. And it's basically all around an options theta decay strategy, right? It's
so one of the thing I do like what Drew is doing. Most of my trade I get into in the debit spread or credit spread. Or sometimes what I told you, I finance it like, I'm finance with one call spread with by selling. If I'm bullish with some of this stock that I'm going to do a two put. So my two put is going to be financed by one call for 45 days ahead. Then pretty much, and I'm like, for $30, I'm already in the call. And since I already have done my homework, this is going to be turned around. Like business like Neo. If you look at Neo today, Neo is around $40. You mark my word, you'll see that in 60 days, Neo is going to turn around, go over $50. So if let's say I'm doing a Neo $45, $50, $45 call, Neo touch $33, I'm selling Neo to put in 30 days ahead. I'm buying 45 days ahead in one call. And here I'm selling to put for Neo downside. So I'm just, taking advantage of the whole volatility, but at the same time, my finance got much cheaper.
right.
And then those kind of volatility I take advantage of, but in each people have their own on the spread side also. When I have lesser things like Tesla I'm on bullish, but I am into a spread. But then I see that my sell leg lost 80%, 90%. If I have my time ahead, I don't hang out. I just buy my sell leg out. So this it already lost 90%. I know I'm bullish with Tesla. I'm saying I'm already in the call leg with somebody's money, right? So those are the thing I usually take advantage of. So it did pay me very well, very well. Many times, when market got even a couple of weeks ago, that if you look at Amazon went below 2,900. I took advantage of the whole thing. I bought the sell leg out. Amazon is over 3,100. Pretty much I'm in the market with somebody's money.
So you're selling two puts to fund the call. So okay.
Yep.
Why are you selling two puts to fund the call? Why not just sell one put to fund one call?
Because if you look at it, whenever it is down, I'm collecting more premium, more money.
Okay, I got you.
I'm collecting higher premium, and then I don't have to worry about 45 days call is still is pricey, right?
So in terms of the delta that you use, are you selecting like an at the money put that you're selling and a 10 or 10 or 30 delta? Is that what you're
around at the money or in the money area put side? Right. When I say that, okay, I see that it's giving me a higher premium and I know that this, let's say 45 days ahead, whenever I'm buying my calling side, I'm doing 45 days ahead. Let's say Tesla. If you look at Tesla, it's big premium you have to pay. So it pretty much is financing my call leg with my put leg because I'm taking advantage of this volatility now. And I see that the whole downtime. If you even look at Tesla is not going to be sitting out. Giving example, Tesla is not going to be sitting here. It's going to turn around. So then whenever it turn around, my call leg already lost my put leg already lost the money, right? Sell leg. And then when it goes bullish, I usually look around 70%, 80%. If they lose my 70%, 80%, I don't wait till 100% decay. I just buy it back.
Right.
Okay.
And then where's the second put that you're selling?
On the both same second
okay,
put.
So you're selling two
the same leg.
So what happens if the price actually goes through the puts that you're selling?
I still have the time. I don't do it short term. I do it 30 days ahead. Both of them. 30 days ahead. It's like it's a calendar. Or you can think of it as a calendar spread. What I'm doing, I'm selling 30 days ahead in two put and financing one call 45 days ahead.
Well, what if, because selling puts have unlimited loss potential, so what happens if the stock just tumbles and drops?
It's when I say, there is always a sale, but that's why I give myself enough 30 days, 40 days time. That way, if it does, then I can always, it did it happen? It did when it happened, but I don't go this kind of strategy all the time. Some of this, when I test out, I'm still kind of hashing out, okay, it is work. It didn't work this time. It did work sometime. Or some of these, like what you are doing, and I do the butterfly. I buy on the butterfly side, or that two put, and I have a two call leg, one upside and one upside, like within $5 difference in between. So, and that also kind of some of them it worked, some of them it did not work. Okay.
Interesting.
So yeah, different strategy I apply, but mostly I stick to my debit spread and credit spread because they constantly print me money.
Okay.
Yeah.
Yeah, definitely, man. It's awesome, man.
And that is always like, something works for me, just keep sticking to it. And then I play what I just told you that, butterfly and the others, I play with it. Iron condor never helped me, and I can never beat the iron condor. It just like, it didn't work out for me. I tried many times. They know what, it's not for me. I'm going to try the strategy works for me.
I see. Well, there's criteria, man, I can help you out with for the iron condors if you ever want to learn a little bit more about them. But I just saw you just joined my Discord room. Awesome. I'll give you access to the private stuff. Just pretty much 92% of that. Like, my room is not large, but really the only reason why I set it up is because of are you November Tango?
That's me. That's Nick.
Sweet. Okay, I'll give you guys both private access. I mean, I usually just set this Discord up because this is where everybody's hovering to. It's quick and it's fast throughout the day. It's just a means of communication. I don't publicize my room like most other Discords.
So you're Cobra One?
Yeah. So I run the entire room, but pretty much 92% of people in that room are students of mine or have been students of mine at some point.
Awesome.
Pretty much when I give you guys a private access room, everybody in that room has paid me about $5,500 for mentoring. If anybody asks you guys, just say you guys paid it. People are like, hey, how much did you pay? Because I actually upped the price throughout the years because like I don't have that much time to teach people one-on-one as much. But everybody's at least they've gone through the mentor program or they are going through the mentor program. So with me one-on-one. If anybody asks you guys, like, just say, yeah, I paid him $5,500, but you guys
no problem.
have all the access and stuff to it. So actually, let me just do that now so you guys can have everything. And if you guys have any like questions too, just shoot me a message. I'm on the Discord.
So you're managing money professionally, but you're still trading for yourself. I mean, are you able to do that during the day even or no?
Yeah. I mean, well, the thing with me is I got analysts that work underneath me, and I have a number of traders, my students preferably, that have hired me, that are also executing. Oh, hang on one second. In your trade, hang on. Is there somebody named Taco Guy in your room? Hang on one second.
I see a Taco Guy says playing Rainbow Six.
Yeah, hang on. Is that whose room is that? Hang on one second. Is that my room or your room?
I have no idea.
Man, I don't have any fake name. I use my real name, and Mushi Bhuiyan, you see that, right?
Huh. All right.
I don't really use Discord that much. I only use Discord to hang out with a couple guys that I play an online game with, but that's rare. So I don't even know what I'm doing in Discord.
Yeah. No, that's all good. Yeah,
in your room, in my room, you'll see that Mushi. My name shows up as Mushi.
Yeah, so the thing about the guy, about Taco Guy, him and I were in another room, and he talked so much crap about me because I was just shorting the market throughout the 4 months, pretty much prior to the COVID. And I kept telling people, I'm like, I'm short, short, and and then the market crashed, and he stopped talking shit. So he's actually in your room, I think. The room that you guys just sent me, the UrbanHood. That's why I asked. I said,
oh, he's in the room. Yeah, we have a lot of crap in there. That's why that cop is there. Once he find out, he kick them out. He knows that, okay, these guys are in a BS.
Yeah.
So that's why I got a cop. Cop doing my
you got a cop doing your stuff.
I'm like, wait, is this guy in my room or is he in your room? He's in your room. He's not in my room. So but it's just like, but anyways, man.
So it's good. What do you say his name? Taco something?
Taco Guy, yeah, he's in your
Taco
room.
Guy. I'm going to have him just go after this guy, see what he's doing in the room.
But hey, I gave you guys the access to the private access room. But what I teach my students, man.
What is that? I'm looking at Discord. So I see now I have Cobra Trading Circle on my left side. On the right side, I have private access. It says Alex Torres, Bodhi Tree, Cobra One.
Yeah. So everybody in the private access room is a student of mine or has been a student of mine.
Okay.
When you are, so like pretty much like the room is free. I don't charge a subscription for it or anything. Like it's completely free. There's a trading circle that I just created because it was requested. Like I used to have a news feed, or this used to be the trading circle, but you get the news feeds automatically just to kind of keep you updated on market stuff, breaking news that comes out. And then the guys who aren't underneath my mentor program, they were like, "Hey, can you make a different channel? Because the feed, like what you're saying, what I'm saying is getting lost because of the news feeds that keep popping up."
I
So
see.
I started a trading circle for the guys who aren't mentor, like underneath my mentor program. Everything with pretty much a lockbox you guys now have access to. But so what I teach my students is to go off of trade logic, because this is how firms think. Like we look at the data that comes out and we look at different trade logics and we find trades and we build out spreads the way I kind of showed you earlier, Nick. And
Yeah.
we risk define it and then we take the trade, but it's never directional. Like we don't care if a trade goes up or down. The probability of these trades over time are what make us more money. And so like, it's pretty self-explanatory opening trades. I don't have any bots in here or anything like that, but all the trades I open are posted here in opening trades. All the
Mhm.
trades that are closed when they're closed or hit their profit targets are closed in the closing trade, or if they expire, they expire.
So we could just follow along theoretically.
Yeah, I mean, well, if you're using TOS, the cool thing about it, and you'll notice the way I'm actually setting these trades, it kind of looks like some sort of algorithm, right? But if you
Yeah.
actually come in here and just copy it, it makes it easier for all my students, because you can just literally go in, click anywhere in the options chain and just paste it. There you go. Now you have it.
Oh wow.
So you don't have to do anything. You just copy and paste the orders into your TOS platform, and you don't have to do legwork or look at any of this.
So TOS, is that a platform that I can hook into TradeStation or no?
It's not.
I have to put money into Thinkorswim.
Yeah, it's a TD Ameritrade platform. And so
Okay.
like, I usually use TOS. I have a Tastyworks account as well too, but for the most part, the charting and features are great on TOS. The execution is great on Tastyworks. It's not par anymore. TD Ameritrade Thinkorswim used to be good, but they're kind of laggy since they signed on board with Charles Schwab. And
Okay, so you use Tastyworks for your execution, but you use Thinkorswim to do your analysis.
I use both. I use Tastyworks to day trade. I use TOS to do position trading, and just overall, most of my trading actually revolves around TOS.